Hello, Maverick traders. Welcome out to your currency recap for April 7th. Corey here with you. We're going to take a look at meaningful news in the markets. We're going to talk about tariffs and trade and the ongoing tit for tat that's going on amongst different countries. And we're going to highlight our very best trade ideas.
Disclaimer. This video was created for professional Forex and crypto traders. Maverick Currencies is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional Forex and currency trader for Maverick, click the apply button in the video description. Let's break down what happened today.
So the markets are in this place where there's a lot of uncertainty about trade and these tariffs and the back and forth. And so I think today was really fear reaching a fever pitch. It reached a peak in volatility and fear and panic, and it really was all weekend long. The futures opened on Sunday, markedly lower, 3-4%. People calling for a major crash, a Black Monday type of scenario. Of course, that didn't play out. But please understand, a top in the VIX and a top in fear does not equal a bottom in the S&P. It might be a bottom, doesn't mean it's the bottom. So tariff news continues. Israel pledging to get even on trade to make it so that their trade balance is flat. They could buy a lot of U.S. products and so on. That's obviously a major ally that needs U.S. support for ongoing wars and things. So I'm not surprised that those that need help are stepping in and trying to, negotiate and create that equalization. But trade is an interesting thing. A lot of times, just because you have a trade imbalance doesn't mean that one is taking advantage of the other. So it's a tricky type of dynamic here we're dealing with. As we look at the price action, in currency land, the British pound was the weakest, CAD, US dollar, Swiss franc on the stronger side of things. As we look at equities, basically flat, international underperformed, crypto up slightly, gold and oil down. So commodities, which had tried to hold on, things like gold had tried to hold on. They've given up some of those gains that they had been making year to date, but still strong looking charts longer term. Bitcoin, Bitcoin Cash, Ethereum, and Litecoin. We call this a snoozer in crypto when the biggest mover is 2%. That's not a very volatile day. And as we look at equities, we're deeply in bear market territory now, having triggered 20% in the S&P and the NASDAQ from peak to trough. So let's make sense of this together. So the S&P chart is in a downtrend, but today you saw how enormous the candle was. The candle here, the peak to trough difference, is what we would term volatility. How volatile is price? Well, very, very volatile today. Compare that to even back here when we're breaking down. The candlestick and the amount of size in daily ranges is tiny in comparison to the type of volatility we saw today and over the past week. This type of volatility is unsustainable. You cannot keep falling 10% a week. You'll soon hit zero, and the S&P 500 is not going to zero. However, we are likely to trend lower. There will be some enormous rallies, some sharp spikes up, and then we'll go lower most likely, and there will be corrections, and then we go lower. And this bear market is really early stage. The average bear market is 18 months to, a couple of years in duration. So if we're a month or two in the downtrend, there's another year or so. And I think a lot of people are looking at COVID and they go back to 2020 and they say, well, the stock market collapsed, but then it just rebounded right back up. Why can't we do that here? Why not just a massive COVID recovery? Well, because COVID, you had massive stimulus, and the stimmy checks are not coming. They're not sending out checks to every household. They're not backstopping corporate debt. They're not giving interest-free loans to corporations and businesses to keep people on payroll and so forth. This is just a different environment. a different environment entirely. Now, if they came out with just massive stimulus and massive checks and so on, could there be that type of recovery? Of course, but that's not the dynamic we're in. In fact, it's very likely to be a little bit deeper. There's likely to be GDP and growth and these things to roll over a bit and to be hurt by all of this. So, we're not getting the stimulus bailouts that we've had previously. Will there be some positive news events where people shoot the market higher? Yeah, and then it will likely fade back off. And that's the dynamic. Here's the VIX, the volatility index, and it hit 60 today. I think that there's a very good chance this is a peak that lasts for a while. The VIX moves in a way that's sort of like an earthquake, and then it will fall, and then aftershocks, right? And then it falls again, and aftershocks, and it falls again. So the VIX is likely to make lower highs and kind of work its way down because the VIX is not an asset. It doesn't have any revenues or earnings. It's just a gauge of overall volatility. Remember, we saw how big the candlestick size was the last couple of days in the S&P. That's what this reflects. But my guess is that the candlestick size, the overall fear and panic has probably hit somewhat of a peak today. But while the market calms and moves less than what it has been, it's still going to be very volatile. You know, it's going to move over 1%, going to have 2% type of days, might even have an occasional 3%. But the 5%, 6% days in the S&P are probably, we've probably hit a peak on that type of fear. Now the VIX trends lower with lower peaks, but that is not a bottom in the S&P. The S&P has probably hit a short-term bottom, but then will trend lower and lower for the coming months ahead. So I think we're officially, bull market, or pardon me, bear market territory and likely to see lower prices. We've got the FOMC meeting minutes on Wednesday. I don't know if there's ever been a FOMC meeting minutes that matters less than this one. Why? Because everything in the last meeting has changed entirely. We're in a completely different world than when the Fed last reported and the all of the things that happened there. So the idea that the Fed minutes and what they were discussing a few weeks ago even matter is kind of laughable. I just don't. It's an entirely different world. The whole tariffs, they came in guns a-blazing, much deeper, much stronger tariffs than anyone had anticipated. So I think you can throw that out the window. We've got the RBNZ. They're expected to cut rates by 25 basis points. We've got CPI here in the US and then PPI. Those come Thursday and then Friday. As we look at possible trades, the volatility, velocity in the markets, not really coming through to currencies quite as much, obviously. We generally look outside of the -1 to +1 category as areas of interest. So on the long side, Swiss franc, Canadian dollars. On the short side, the British pound stands out. Let's look at the charts and say, talk about why that is. Well, if we start on the bullish side, here's the Swiss franc. You can see the upward trend. Now, you've seen that start to roll over. We're on a little bit of a sell signal, but I think we're going to high base here. I think we're going to hang in. So this is one for the watch list. It's not ready to buy right now, but imagine us turning higher, starting to break out again. This will flip to a buy signal. We'll continue to have upward slope in the moving average, and the RSI starts to turn back up. There's a lot of ifs there, but Swiss franc could be interesting. If you want one that's more actionable right now, it's the Canadian dollar. The CAD has broken out, has that upward push, upward slope, buy signals, the characteristics we're looking for. So CAD is my favorite long right here, right now. Favorite short right here, right now would be the British pound. So obviously CAD long. Well, we're going to short the British pound, right? So there's your pairing. And you can see why we're on a sell signal, downward slope, downward trending. all the characteristics for a good short. So pound CAD is the trade. VIX is likely topping out, but equities still probably work their way lower longer term. Now, do I expect a pretty good sized bounce and some corrections and things mixed in? Absolutely. Keep that position sizing solid. Use risk management at in everything that you do, and you'll be just fine. Have a great week, everyone. We'll see you next time.